Good morning, thanks for your company. Well, today is all about economic data and all eyes will be on the GDP growth rate, which is due out in just under an hour at 11:30, and it's likely to have shown that our economy grew 1.7% year on year, driven by government spending on infrastructure and exports. The third quarter itself, the GDP rate is expected to have grown by 0.5%, but economic growth will need to charge much more faster than that to meet the Reserve Bank's target for yearly growth of 2.6% by mid next year. Yesterday we learned Australia's record surplus hit $7.9 billion for the current account, smashing through expectations, and it also marked the first straight back-to-back quarterly surplus since the fourth quarter of 1973. And today the share market is tracking heavily lower for the second straight day. It's now about 1.2% lower, or 82 points down, with all sectors in the red and the futures suggesting further falls. Yesterday we lost 2.2%, or 150 points. That was the benchmark S&P ASX 200, and we wiped out about 1.5 weeks of gains. However, some investors are taking this as an opportunity to buy good companies at cheap prices. Overnight, that weak sentiment flew thick and fast as US equities closed low for the third straight day. We saw the S&P 500 down 0.7%, while the Dow closed down the most, about 1%, or 280 points lower, as traders and investors copped that blow from US President Donald Trump, saying that China trade deal will now have to wait until after the 2020 election, which is over a year away. And this was really to the disappointment of traders who thought the phase one tariff or China tariff trade deal would be this year, adding fuel to that fire. The US also unveiled that they will be likely going ahead with the December 15 tariffs on Chinese goods. Locally, what are we watching today? Well, Santos was upgraded to a buy by Citi, giving Santos a price target of $8.90 following their announcement yesterday that Santos's production will grow at an annualized rate of 8% right through to 2025. CSL holds their research and development investment briefing today, reinforcing that they are indeed the biggest global player in blood plasma collection. In FY19, CSL invested $832 million into R&D. That's about 10% of their total revenues. The company also announced the first trial to prevent asthma attacks, whereby sufferers self-administer an injection every 2 to 4 weeks, suppressing inflammation of the airways and preventing asthma attacks. In New York, Rio Tinto lost 1.6%, and locally it's trading about 1.5% lower at $95.48 after announcing a $1.5 billion investment to extend their US copper production in Alaska right through to 2023. No news for BHP. However, in New York, it lost about 2%, and locally, it's following that theme, about 1.8% lower. Gold miners are up the most in the mining sector. Gold Road Resources is up 3.7%. Northern Star up about 2%. In broker moves, speaking about gold miners, Saracen is trading 2.2% higher, and its price target was raised to $4.50 by Macquarie. Macquarie also upgrading Bravora's price target to $5.80, and Xero's price target was raised to $90 by Morgan Stanley. Lastly, let's look at commodities. The gold price has gained ahead on the global weakness across markets. The gold price is up 1%. The iron ore price is higher as well. It's now at $56.32. The iron ore price is slightly lower at $88.31 a tonne, while the Australian dollar is trading at about 2.5 week highs, buying 68.46 US cents. And lastly, for those taking part in our $1,000 global share portfolio Christmas challenge, the All Ordinaries is trading at 6,736. And if you want to take part in our competition, follow the link below. Have a great day. Happy trading.